Apple is scheduled to report quarterly financial results after the stock market's close on July 31st, 2025. Investors are asking me if they should buy Apple stock before the company announces earnings or after, or if they should be buying Apple stock at all. Of course, I famously said that 2025 was not going to be a good year for Apple stock. I warned investors to begin 2025 not to buy Apple stock, and I made that recommendation around January 1st. Of course, Apple stock is already down almost 15% year to date. So hopefully you listened to that recommendation. And if you wanted Apple stock, you were able to get into it a little bit lower than you were able to buy it to begin the year. Of course, Apple and Tesla were two of the Magnificent Seven stocks I told investors not to buy to begin 2025. And these two are the ones that are down the most in those Magnificent Seven companies. But what about now? What about almost heading into the second half of the year and Apple going through much of the progress? Is it still one that investors should not be buying? I'll answer that question here. I'll also discuss what investors should look for from Apple in the upcoming earnings release, and I'll share with you my proprietary discounted cash flow model for Apple that calculates the fair value of the stock today.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, Apple last reported their quarterly financial results for the quarter that ended March 29th, 2025. Notably, this period did not yet have the major impacts from the tariffs that President Donald Trump placed on America's trading partners. Still, Apple generated solid growth in the quarter, generating increases of roughly $5 billion to $95.3 billion, up from $90.75 billion in the same quarter the prior year. For the 6 months, Apple's growth was $9 billion higher than the same 6-month period last year, generating close to $220 billion in sales. The gross profit also increased up to $44.8 billion in the most recent quarter, up from $42.2 billion in the same time last year. The gross profit margin will experience big changes in the upcoming periods. First of all, longer term, Apple's gross profit margin has been expanding because the services segment is growing faster than the product segment. And as you can see, the services segment is roughly twice as profitable as the product segment. But that's fueled by product sales, right? You're not going to subscribe to Apple Music unless you have an iPhone, most likely, right? So they're connected, but the services segment is growing much quicker, and that's generating profit margin expansion for Apple. Now, on the downside, Apple famously manufactures most of its products and assembles most of its products in China, and the United States is forcing, or I shouldn't say forcing, but implementing the highest tariff rates on China. It seems like the current administration is not happy with China and their trade policy, and so the current administration is placing higher tariffs on China. Now, China hasn't very much negotiated with the United States. They've retaliated with tariffs of their own and restrictions on certain items that are strategic for the United States. So it doesn't look like there's going to be an improvement in trade policy. There just seems like previously China had restricted a lot of US products going into China. For instance, you're watching this video on YouTube. I don't think you're able to access YouTube in China unless you're using a VPN or some other means of accessing YouTube, right? It's restricted. So is Google Search, so is Facebook, Instagram, all of these services that are restricted in China, whereas you can get TikTok here in the United States. You can access AliExpress and some of Alibaba's websites here in the United States. And so the policy has been restrictive from the Chinese perspective, and now the United States is finally retaliating against the Chinese and saying, well, if you're going to have all these restrictions on US companies selling products in China, we're going to have restrictions on Chinese manufacturing coming into the United States. So it's been an escalation of trade barriers, and overall, that's a bad sign for investors and consumers alike. It's going to lead to higher costs, especially for Apple. The management team has noted that one of the ways it's trying to mitigate that is by shifting production from China to India, because India still has lower tariff rates than China, even though India's tariff rates are also increasing. The administration in the US would like Apple to manufacture and assemble its products in the United States, but the United States doesn't have the infrastructure for Apple to do that. It's not like tomorrow Apple can say, okay, we're going to start manufacturing and assembling in the United States. There's just not that infrastructure that exists here. It would take, I would argue, over a year, probably 2 years, to build up that capacity to even make that choice. So until then, Apple is shifting its production or trying to increase its production in India and then import those Indian manufactured and assembled iPhones and iPads and other products to the United States. And then the products that it's manufacturing and assembling in China, it will ship to other parts of the world that are not facing the tariffs. So Apple is just shifting its manufacturing outside of the United States, not really bringing any manufacturing back to the United States, which has also upset the current administration. It's not something you want to do right now because the current administration has shown a willingness to attack businesses that are not implementing policies that are what the current administration favors. So, increasing headwinds here for Apple because nearly all of its manufacturing is outside of the United States. And that's precisely what the current administration is attacking right now is the manufacturing outside of the United States by US companies or by companies trying to sell products to US customers. So an increasing headwind here for Apple as a result of the change, the radical change in policy. And already coming into 2025, I didn't like Apple stock because of the valuation and the relatively slower growth among its peer group. And now when you couple that with the increase in risks to its supply chain, it makes Apple even less attractive in the near term. Now, looking at the valuation, the stock still looks overvalued, even though it's down a double-digit percentage points here in 2025. Current market price at $211 a share. I feel this stock should be trading closer to $175 a share. So it's overvalued here. I wouldn't say by a large magnitude, but it is slightly overvalued and the risks are elevated. When I go to fiscal.ai to retrieve the company's forward price to earnings ratio at a forward PE of 29, I also think that's slightly overvalued. Now, one of the reasons why Apple still trades at a premium valuation is because the company has demonstrated decades of an ability to innovate. They've created some of the most innovative and best-selling products to ever exist, including the iPod, the iPhone, the iPad, the AirPods, etc., the Apple Watch, several new and innovative products that have generated billions of dollars in sales. And the company has a very strong ecosystem with a high cost to switch. If you're in the Apple ecosystem, it's going to be very annoying to switch out of the Apple ecosystem. It's going to be time consuming. And so Apple boasts of very high customer satisfaction and customer retention ratings because they serve their customers well, even though they sell their products and services at higher prices compared to its competition, which is another reason why it makes it attractive to investors. Not only do they generate hundreds of billions of dollars in sales, but those sales also come at higher profit margins compared to its peer group. So, longer term, it's still an attractive company for investors. Near term, though, too many headwinds, especially with the elevated risks from tariffs. So, to answer the question, do I think you should buy Apple stock before the company announces earnings? I don't think so. I had the stock rated as a hold and I last updated that on June 4th, and I'll update that recommendation again here today, telling investors I don't think you should be buying this stock before the company announces earnings. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.